Lost Generation coming back at you with the basic concepts financial module on the tabletop. Paper and pen, as always, as raw and authentic as possible here at the Lost Generation Project. I'm not a financial advisor, nor am I a genius in any of these matters. I'm just a normal, average guy, a little bit of old school methodology, trying to help people out. We're going to talk about balancing a checkbook. Now, this is a lost art because most people don't use checks. But this whole demonstration here should help illustrate to you why having direct deposit, auto bill, ATM usage, using your card for every coffee that you buy doesn't really shake. The whole idea of a checking account is as an operational fund. And in the old days, you would write checks out of it nearly exclusively. Now, actually, if you talk to any banker, they will tell you they look for people using savings accounts like checking accounts. You're not supposed to do that. And the whole idea was that your checking account does not accrue interest. And the reason it doesn't accrue interest is the same reason why you shouldn't be using direct deposit, auto bill, and all that jazz. Because if you had interest coming in at varying rates on varying amounts, you would not be able to keep a proper running balance. Now, there are some savings accounts you can write checks out of. Usually that's out of a money market account, but that is besides the point of this particular topic. So your savings account is a fund for savings, big surprise, that is supposed to accrue interest, and that will be posted in your statement. It's not meant to be used as a checking account. Now, your checking account, you used to have to balance it. As you'd write a check or deposit funds, you would keep what they call a running balance. And how do we keep a running balance? We start with an original balance, and then we add in our deposits or credits, and then we subtract out our checks or debits. And everyone has a little bit different methodology here, especially with this over here, your item number. Now, if you're a private citizen and this is a low traffic personal account, I like to use the item number on checks just to keep track of the check number, because more often you will be referencing what check number something was. If you have a business, you will probably want to itemize every transaction. So any debit or any deposit you would want to itemize, because chances are if you have a business, you're going to have to go back and look for individual transactions of any sort. So there's different methodologies there, and some logs or registers that you have to track it on may have a specific part for check number, some may not. So in this particular demonstration, we will be using the item number slot just to track the check number of certain checks that we're using. Now, I did nice round numbers here just for ease, and I didn't put real dates in. I did use different color inks, which you're probably not going to be doing, but it'll just help show for this demonstration what's actually going on. So let's begin. Let's delve into this. We first open the account with a deposit of $1,600. Now, since there was no existing balance, we put that $1,600 into the account, and our forward balance is now $1,600. We write check number 1 for bulk condoms in the check amount of $200. Somebody's having fun, a lot of fun, but they're doing it safely. So that's all that counts. So our check was written, check number 1, written for $200. Our forward balance is now $1,400 because we started with the $1,600 and removed $200. Check number 2, written shortly after our big ticket condom check, is our check for the rent. Rent happens to be $900. So $1,400 minus our check of $900 gives us a forward balance of $500. Now, at some point, this gentleman will get his tax return. So we have our date, incoming check, tax return. We have a deposit of $1,300. $500 plus the $1,300. We now have a forward balance of $1,800. Then he receives his paycheck. Good times for this gentleman. 2 nice little checks in a row there. We now have another deposit into the checking account of $900. So $1,800 plus $900 is a forward balance of $2,700. Well, he's getting hungry at this time. He needs to stock up his pantry and his refrigerator. So he uses his debit card attached to the checking account to buy groceries in the amount of $200. $2,700 minus $200, forward balance of $2,500. He's doing some minor renovations, maybe adding a stripper pole in his living room. So a debit on his card for building materials in the total of $500. $2,500 minus $500, forward balance $2,000. He decides to give someone $100 in the form of a check as a gift. Check number 3, date, description, $100. So we have that $2,000 balance minus the $100, forward balance of $1,900. Well, he's got a bunch of condoms. He's now got a stripper pole in his house. The only thing he needs is to fuel the party. So he uses his card to buy $100 worth of booze. Balance of $1,900 minus the $100 gives him a forward balance of $1,800. Then he gets paid again. Gets that $900 deposit into his account. The forward balance is now $2,700. Very basic concept here. Obviously, you're not going to have nice round numbers all the time. You will have to do a little bit of math. It won't be this easy every time, unfortunately. But that is the basics to how you balance a checkbook and keep a running balance. And that was considered very important and something desirable to be able to properly do years ago. But now, people have a checking account. Their money gets plowed in automatically. They don't know what they got paid. Eventually they get lazy, stop checking on it. They've got auto bills coming out. They can't keep track of all the different dates that's being pulled. And the amount can vary because the cable company and the cell phone company like to stiff you. And then they're buying coffees and snacks with their debit card. And it becomes a chaotic nightmare mess where they have no idea at any given time how much money is in their checking account. And this becomes a problem when you have significant bills to pay and you're, like most people, you're living paycheck to paycheck. It's very easy to get yourself into a bad position where you could overdraw or not have the funds. So I hope you appreciate this basic little module. I kind of like doing these, even though they're probably boring and not going to be ultra popular. But your mommy and your daddy aren't teaching this to you anymore. And people who are taking advantage of you financially are going to teach you. So I'm glad to be the one to help out the lost generation. And, you know, I really like helping all of you guys lost. We'll all get found together.